We have been considerably tighter in the spread when they started QE in 2015. So there's certainly some room to go, although the bulk of the tightening is probably behind us due to the action of the ECB so far, and also the pan-European political response with the recovery fund, for example.
At this point, how much do you think easing is actually priced into the December meeting? Again, before going into today, there are a few articles here and there suggesting that the market was looking for an upsize of the PEP package by about 500 billion euros, more or less, an extension of its end date to the end of next year, so to December 2021. Do you think now, with the statement and the language that has just come out of the ECB, that the goalposts have shifted a little bit and investors are going to ask for more?
No, I think what has been announced so far is broadly in line with expectations and makes sense. I don't think anyone is expecting the ECB to end asset purchases anytime soon, given that the main goal of the ECB at this point in time is to support fiscal. So I guess an extension of the program in December, of the PEP program in December, has been widely expected and makes sense. And you see that also in the market reaction. So Italy bond spreads have moved 2 basis points, which is not much in the grand scheme of things.
And what about TLTRO? As an interest rate trader, how important is it to you to see them adjust some of the funding conditions, perhaps, and make it even easier for the banks to borrow at that minus 1% rate? That was obviously one of the latest additions that they introduced over the summer, or even an extension of that TLTRO program. And how much are front-end rates traders really betting on a tweak to TLTRO at this point?
I think it's reasonable to expect also additional TLTRO operations next year. That's at least our call. It makes also perfect sense in supporting the fiscal, what I mentioned earlier, not only the asset purchases, but also the TLTROs to keep the credit expansion going. That's a very important part of the exercise. And indeed, we would expect more operations next year, and also an extension of the favorable minus 1% interest rate, which currently runs until the middle of next year, also to the end of next year, in line with the PEP extension. But we would not necessarily think that they lower the minus 1% rate further.